All right, what's up, everybody, and welcome to the LV Home Experts radio show every Wednesday at 5 p.m. Pacific Standard Time. Hopefully you guys are doing well out there. And I just want to say thank you for tuning in. We got a total of 41 people. We're going to let this thing count down a little bit and get some more people on here before we get started. I do want to introduce my man, my right-hand man, the realist. Why do I always say the real estate guru? Dan? You're not even a real estate agent, bro. Why do I always do that?
I don't know, but oh, there we go.
Yeah, there you go.
Okay. I don't know, man. I have no idea. I think it's a thing that we've been doing. We've been in the radio for a long time.
Yeah, I know.
And I think you got like all these pitches, and we've been doing different shows. I think sometimes it just gets mixed up.
Yeah, dude. I see you got all the gear promoting.
Dude,
today.
I got the bling, dude.
I know. So what's going on with this bench? What is this? French?
This is
bench workshop.
Yeah, this is my thing, man. It's my my baby right now.
Okay, what's going on with that?
Just trying to promote more of the financing part. I'm gonna put out more videos. I had a lot of stuff that I was doing internally.
Yeah.
Joey's been over there, and we're trying to work out the kinks. So I know it's not been as consistent on these podcasts, but trying to put out some stuff with on my channel and things.
Gotcha.
Yeah.
All valuable content.
It's valuable, man.
It is.
I do want to introduce my right-hand man, operations. I don't know. We got to get you a title, Joey. What's a title we're going to get you, man? We got to figure out a title for you, right?
Yeah, we need something creative.
Operations manager? I don't even know.
He's the what do they call it, man? He's like I wouldn't say the Oracle. What do you think you would call him?
Oracle.
Man? The Oracle.
Man, that's big.
Oh, that's big.
That's
he's the all in one.
No. He's what's his name? What's the main guy's name on that show, in that movie?
Oh, he's talking about on the Matrix?
Yeah.
Oh, it's Neo.
Yeah, he's Neo. He's Neo. That's who he is.
That is his name.
Hopefully I can live up to that.
Oh, I mean, you are. I mean, you're cranking it out. Now,
what's Lawrence Fishburne? You guys know that? Just quick.
No.
Oh.
I don't even know who that is.
Yeah, he's the guy in Matrix,
He's the guy.
bro.
Oh, is he?
Yeah, he's Neo.
Oh, is he?
You're him, bro. You're Lawrence Fishburne.
Dude, he looks ugly. I don't want to be him. I want to be the cool guy.
Hey, we'll just call you. What's up? What is it? LF.
No. What's his name? Neil?
Yeah. But
No. What's his name? What's his name on the show? On the movie?
I don't remember.
Ask the people. What was that guy's name?
Yeah. Let us know what's that guy's name is.
Morpheus. There you go.
Morpheus. Okay,
Yeah.
You're Morpheus, bro.
Yeah. Sounds like I'm about to go smoke meth. Morpheus. What a disgusting name.
Hey, come on, Morpheus.
But anyway, just want to let you guys know the channel is growing, so I really do appreciate that. If you guys haven't had a chance to go to the Instagram account, check out the Instagram account too as well. We have about 4,100 people right now that has subscribed to the Instagram account. Also, Joey's moving up on the chain here, so we decided that we're going to expand and have a team. We put a team together. Normally, what has happened is that a lot of business has been coming in, right, Joey?
Yeah, it's a tremendous amount of business.
I mean, the overflow is just overwhelming to the point where, I had a bunch of agents that were just picking up the leads, but now it's time to create a team. And Joey's actually my right-hand man. Talk about that a little bit, Joey, as far as like what's going on, as far as the team growing, and why we need people.
Yeah, well, first and foremost, I mean, what you've created here is absolutely phenomenal. So we're just kind of piggybacking off of that and just growing, expanding. Right now, we have a tremendous amount of business, a lot of buyers in this market, as everybody can imagine. So we're really just we're getting solid, experienced realtors that know the business, that can, handle the amount of business,
the volume,
that's coming in. Because I'll tell you, it's not easy, but I'll tell you, once you find out that you find that flow, and you find your groove, man, it's a great place to be. So,
Gotcha.
We're just growing it. We're getting some really nice quality agents in here. So if you do receive a call, right, from a team member, please, let them know, or just understand that they are working with us. And
yes, correct.
And we're
also, you make a good point. So here's a team. Here's the thing. If you speak to anybody from Simply Vegas and you ask, hey, do you work with chakits? Make sure to find out if they are actually on my team. Ask that question. Hey, are you actually on chakits' team? If not, then I'm not associated with them whatsoever. And if you're trying to get a hold of us or team member, just contact us directly at 702-319-1092. And if you guys are an experienced real estate agent out there and want to actually join the team, okay, right now, I'm just going to let you guys know, we have a total of 53 approval letters totaling $41 million, right? Right now, we have a total of about 48 escrows. And that's about 15 million, or it's actually 16 million in escrow right now. So we are closing a lot of deals every single month. We have more business than we can actually handle. So that's the reason why we are now hiring a team. And Joey is the front man. He's going to be handling everything. Okay, so initially we were going to hire people that are just getting into the business. Again, if you don't have a real estate license and if you haven't done a couple transactions, this team is probably not going to be for you. So please do not call. But if you guys are out there, you guys are licensed, and you guys need more business, okay, I'm going to have a link in the description below with Joey's contact information. You guys can give him a call, and he'll definitely screen you to see if you make the cut. What do you think about that?
I love it.
You guys are looking at me like deer in the headlights.
Yeah. Well, I'm thinking, when you have all these things happening,
yeah,
it's a lot to digest.
No, it is.
We're all sitting here thinking like, man, you got all these people you're hiring, you got all these leads, you got all this stuff going on.
Yeah.
And you're still trying to adapt. It's just a lot, man.
It is.
Yeah, it's a lot to juggle. It's a lot to juggle, and that's one of the reasons why we want experienced real estate agents on the team. Some agents that can, they can figure out the process. Like if you have 4, 5, 6, 10, deals under your belt, you pretty much know the process.
Oh,
right?
We just got $5. Joey, shake it, baby. Shake your money.
Look at that. Super chat, guys. Hey, if you guys want to donate to the cause with the super chat, go ahead and give us some money because, we love money.
Hey, Chuck, I got an idea, man.
Yeah.
If you start getting money, right, we get to like 500 or some crazy number, right?
Yeah.
You should have like a ceiling drop of like dollars after the show. Like, just like, bam, that would be pretty sick, bro.
Oh, like just throw money in there.
Yeah, it's like you know how like you have like the confetti that falls? We should have like money that's sitting inside of like a like a ceiling bucket or something, and it just falls when we end the show. Like, everybody throw the money in, and it's like boom, It's
now,
like
guys,
bottle service girls walking out, right?
Yeah.
Now, guys, on the super chat, if you guys hit us up on the super chat, what's going to happen is we're going to stop what we're doing right now. We're going to go ahead and read the question out loud and answer the question. So go ahead, Joey. What is the question we have here?
No.
Where is the question?
Okay.
I have great credit, 760 and $10,000. How hard is it to get approved with no job, moving from California? Obviously won't have a job right away or away out there.
So, Dan, answer that question because that's more of a financing question.
What's the question?
Okay, so basically this guy has a credit score of 760, right?
Yeah.
He has $10,000, right? However, he doesn't have a job, but he's going to be moving out here from California. What should he do, right, if you were in that position?
Oh, we got another $5.
That's right, baby. Thank you so much. Thanks for the love. We love you too. All right.
You know what's cool about that too is you got the picture on
Yeah,
there, so
I know.
You can really see like who these people are.
I know. She's so pretty, huh?
Yeah, not bad.
But let's go back and answer this gentleman's question.
I wanted to say one of the things about the 760 credit score is 740 or higher gives you top tier.
Ooh, top tier.
Top tier. So
is that the highest tier?
The highest tier.
Ooh, so that's the best credit score you can get.
No, it's the best you can get for interest rate. Everybody's gauging, credit scores off of interest rate. So 760 or higher, you're already in that top tier. You go above 800, you're really starting to look good. I mean, it's all going to be the same, but as you keep going up, there's not much of a difference.
Yeah.
740 or higher. So if you're at 740 or higher, you're top tier pricing. If you're somebody moving from California and you don't have a job here, you want to get a job here. You want to get something lined up. If you got a job in California, let's say you want to buy a home here, your job's preventing you from moving here because you don't have something lined up, there is options for you, even if you're self-employed, to buy it as a second home. So we have a lot of buyers that go both as far as they have two different options. They're working, maybe they work from home, maybe they have a job in California or, out of state, Texas, New York, wherever. If they got a job and their job is allowing them to work from home, and they say the verbiage they can work in any state, then we can get you a loan here. If you don't have a job, though, you'd have to come here and find a job.
Gotcha. Now, if he comes out here to find a job, how long does he have to stay on that job before he can actually get financed for a home loan?
Well, it depends on the type of job. If it's an hourly job, then we have to really gauge the hours. I would say you would want to be here at least 30 days, get a couple pay stubs in, right, to show the hours that's consistent.
Yeah.
If it's a nursing job or some type of job where you have sporadic hours, same thing. We need to wait 30 days. Then we got to do a verification of employment, take an average of hours that person works. If you're a salary position, we can do it right now.
But does it have to be within the same industry?
No, it doesn't.
Okay.
You just have to have a 2-year working history. You have to combine a 2-year working history. Now, if you're self-employed, that's a different animal, right? Self-employed's a little different. It's a little bit more risk.
So he could be working right now, got laid off about 6 months, but come on out here, then find a job.
Would that work? Well, if it's 6 months or less, yes. If it's 6 months or more, then he may need to be on the job for a period of time. Could anywhere from 6 to 12 months. Why? Because now he's like reestablishing himself. What was the reason he had 6 months, right? If it was he got laid off and he started a new job, they may want him to be on there. But it has to make sense too. Like you got to go to an underwriter and say, look, what if this guy was, I don't know, he was a CEO of a company for 4 years. He got sick for 6 or 7 months and now he's back being a CEO. Probably going to be okay, right? Because he's had a history. It's the same thing. So there's a reason for it. Letter explanation. But if you're just unemployed or you didn't work, you're on furlough and you go to something totally different, you may need to have a reestablishing period.
So to reestablish, is it 24 months or 12 months? How does that work?
No, it's anything 6 months or more.
Okay.
That's when they take that in consideration, right? If you've been unemployed for 6 months, they got to look at that. Maybe you may need to be back at work 6 to 12 months just to show that you're back to work and everything's steady.
Okay. So, Joey, I want to talk to you about what has been going on in the market lately. I know that you mentioned to me a couple times, and I've seen this time and time again, that people right now, actually buyers, are submitting offers above the appraised value, right?
Above list, above appraised value. They're doing anything they possibly can do to get a house right now.
That is crazy. And this is just for resale, is that correct?
This is for resale, yeah. So this is actually something that just happened to me yesterday.
Yeah, tell us the story.
So buyer comes in from California. We have about 10 properties that were picked out.
Yeah.
All of them were gone. By the time she got here, she drove out here from California, got here next morning, appointment set, all the properties were gone.
Oh my gosh.
So we had one house.
One house.
One house. We drove to see the house, and I kid you not, there were cars outside waiting to get into that house. All right, so at the end of the day, we had about 7 offers on that property.
And what was the price point on this house?
It was $595.
Wow. Isn't that amazing?
$595,000.
So it was a bargain.
Yeah, it was a steal, but it gets better. It gets better, right? But so you have these people waiting outside. We had about 7 offers or so, the listing agent told me. So we were competing with other offers. And you know what? I had a great rapport with the listing agent. He gave me some inside information. I knew exactly where we needed to be. And we had to come in $20,000 over list price. So we had to commit $615,000.
Oh my God, that is so crazy, dude.
Just to have an opportunity.
Joey, I got a question.
Yeah.
What about the appraisal?
So
Right.
Risk. Absolutely.
Yeah.
But my clients need a house. They sold their house in California. They needed a house here. So in the contract, we said that we would pay $10,000 above the appraised value should it come in less than $615,000.
Okay. So now the question is, if you're a buyer out there and you're listening to this, you're probably thinking like, Joey, are you crazy? You want me to pay $10,000 above the appraised value? Now, here's the thing. This is the way you got to think about it. If you didn't make a move on that opportunity, we're talking about $10,000. Last year, the market has gone up 10%. Now, think about this. Let's just say the market goes up a 0.5 point or 1% every single month. You'll get that money back within like 2 months. So if you didn't pull that trigger now, right, and spend that $10,000, in 2 months later, you're going to be chasing that inflation anyway. Does that make sense?
Yeah, absolutely.
So this is where you need to understand as a consumer out there, you got to know what's going on with the market. Unfortunately, that's just the market we are in today. Now, there's another video that I want to show you that Joey had posted on Instagram. Is that correct, Joey?
Yeah.
Now, take a look at this video here, okay?
That's a handsome guy right there, man.
Thank you, Dan.
All right. Good. He's not the Oracle. He's the what? Nino.
He's the Neo.
The Neo. He's the Neo.
And you're Morpheus.
Oh, man.
It's like, oh, man.
Shut up, man. Get up, man. All right, let's watch this.
Man, let's do
watch
it.
this.
So a lot of people have been asking me how the real estate market is doing in Las Vegas. Check this out. Look at this line waiting to get into the new home build.
Wow.
Absolutely incredible.
Wow.
So everybody that was
What
in
was
line,
going on over there,
yeah,
dude?
so check this out. Everybody that was standing in line was a pre-approved buyer with KB.
Yeah.
Okay. They were doing. There's about 40 people
Yeah.
in line that came out for this
Yeah.
deal. They had to stand in the parking lot, and the salespeople came out and they released only 3 home sites.
Oh my God.
They literally drew the numbers out of a hat. So there were only 3 home sites selected or drawn, and everybody else had to go home.
Oh my gosh.
So they had to wait till next month.
Okay. You want to explain how that drawing works just for KB homes?
So basically, you get pre-approved with their lender, and then you go on. You get your placeholder.
So if you don't even get approved, even though that you're approved with your own lender, if you don't even get approved with their lender, you won't even have the option to have your name in the hat for a drawing.
Exactly. You just get your placehold.
Yeah.
Right.
Wow.
So then they call you out. They say, hey, listen, we're going to do a drawing on Saturday. If you guys want to come out and participate, come out. So everybody shows up, and then the home builder will only release so many home sites per month, and typically it's between 3 and 4 now.
Yeah.
Right. So they all just stand out there and draw a number out of the hat. And then if they want that floor plan and they want to move forward with it in that home site, then they have the option to. If not, they pass and they wait until the following month.
Now the question is, why is the builder doing this? What are your thoughts,
They can't keep up with the amount of construction.
Dan?
Supplies.
As
materials.
far as what? Why they're doing a lottery?
Yeah. Why are they doing a lottery, and why are they only releasing 3 to 4 lots at a time?
I think too, it keeps the demand high.
You're absolutely correct.
And it keeps people engaged, and also they can sell a house for a higher amount.
That is correct.
Because I think what's happening is when you have scarcity, then you have control.
Correct. Supply and demand. And this is how smart the builders are. Like you said, the reason why I'm going to elaborate on what you said, the reason why they're doing this is because what they're doing is forcing the appreciation up. Because once they release those 4 homes and they build it, the next time they release it again, those lot premiums are going to go for more. And that's why I say when you read these contracts, the contract stipulates that the base price is the base price. You can't negotiate the base price, which is I totally understand. But with the lot premiums, it says it right on there. Lot premiums are really $0 amounts, and we can charge you whatever we want. I literally had to go on the bid with Pulte up in Fox Trail.
Yeah.
We actually had to bid $30,000 more above the lot premium. Lot premium for the lot that we wanted was $52,000, right? But we actually got it at $82,000. Okay. Here's the thing. Unfortunately, if you're looking to come to buy in today's market, that's just where we're at. A lot of people think that they can come out here, get a discount. Now, a lot of people have been watching my videos for the past, 2 years, right? Back then, we could negotiate. Unfortunately, it's supply and demand.
Yeah.
That is no longer the case now. It is what it is.
Yeah.
Right? Now, these builders, what they're also doing is this. Okay? Yeah, let's hit it, baby.
I got 5 on it.
That's right. What's it say right there, Joey? Go ahead and read that on out to us.
Yes, but there are thousands of houses in Vegas in abundance. Scarcity is for the weak.
Ooh.
Abundance is for the weekend, baby.
That's right. Let me hit this.
I love that.
Yeah. Is that a true statement?
I would say it's got some trueness to
Yeah.
it. I'll give it a strong, 8. You know what I mean? I wouldn't give it a 10, but I give it an 8. It's pretty close.
Now, Joey, I want to go back to this discussion that we had regarding your client submitting an offer about $20,000 above, right?
Yeah.
You mentioned something that was really brought to my attention, and we got to clarify this. You said that you spoke to the agent.
Correct.
That plays a big part of getting your offer accepted. That tells me that you're doing the right thing by calling the agent, probing the agent to see where they stand. What can you do to get your offer accepted, right?
Right. Absolutely.
Kind of explain that in detail.
Well, dealing with a lot of these agents, they won't even give you anything, right?
Yeah.
So the first thing is you want to be kind.
Yes.
Yes, right. You want to massage the situation. You want to get to know the other agent, right? In this situation.
Yeah.
So basically that's what I did. I really befriended him and, congratulated on all the success and yada, yada, and just kind of negotiated my way in there with the right questions. And he just kind of opened up to me.
Okay.
So a lot of agents, they kind of hold that close to their chest. But if you do it in a way that's, you look, hey, I'm just trying to get a deal done. These are my clients, and you go to bat for your clients. You let them know how strong they are as a buyer and how willing they are to close the deal, and how we're going to stand behind them and just make it a smooth transaction.
And you know what's crazy? As long as I've been in this industry now, when an agent calls me, I can tell right away if they do a lot of deals, right? And as a listing agent, you're going to want to work with a buyer's agent that knows what they're doing, right? Like you could tell right away if they know what they're doing, right? So that does give you leverage inside the door. Now, here's the thing. The listing agent doesn't have to give you that information. But obviously, you're good at what you do. You're able to probe that agent to kind of see where you stand, so that way you can reposition yourself for your client and also to get your offer accepted, right?
Exactly.
I got a suggestion.
Yeah.
What's up?
What if you showed up with some gift cards, Starbucks gift cards? Like, hey, I want to talk to you over here on the side for a second.
Is it like a $300 gift card?
Hey, my buddy, my guy here wants to get into a house, and then you kind of flip out some gift cards. So what are we going to do to make that work?
Now, I did get an email the other day. One of the subscribers sent me an email, right? Was like, hey, Chuck, I see that there was a new release on a new track, and you had all your clients. How were you able to get your clients' offers accepted on the new track without waiting in line? Well, you got to give us a call. I mean, we're just not going to tell you everything, right? We're not going to share our techniques and strategies so that way you can lock up the deal. So, I mean, obviously we want to earn your business, and we already share so much content on YouTube, right? As far as how to build a home. So if you guys are interested in purchasing a home and you guys want to get in, and this is what I call the early bird, right? Give us a call, because once we find out what you're looking for, we can set you guys up for success. And we always talk about this. You always want to be one of the first in the track, because by the time they do the second phase, third phase, you're going to probably break even at that point, and by the time they're done, you're going to be in equity position. Now, granted, that doesn't mean if the market does crash, because the market can crash. Now, let's talk about this, the marketplace right now.
Let me ask you a question on that real quick.
Yeah.
If you go into and you get into a new homes track or a new home build, and you're like one of the first people,
Yeah.
does a builder know that you're gaining more by being one of the first?
No.
They don't know that.
No, because what happens is, this is how it works with the builder. They want you to get approved, and like I said, it just depends who the builder is. They want you to do the lotto, or they want you, right, to raise the price. They want your clients to raise the price. Yeah. But if you know the sales team, the sales manager, right, I'm not going to tell you how I do it, but you know what? You got to get the inside. You know what I mean?
I see what you're saying.
You know what I'm saying?
You got to know somebody to know somebody.
Hey, that's how it is. It's Vegas. It's like, hey, man, you scratch my back, I ride your back.
Yeah.
That don't sound right. Never mind. Ooh.
Something about back and something.
Especially when you got that hairy back, man.
Wildebeest.
Dan?
That's
Wildebeest.
Dan. Hey, give us a super chat, and we're going to show Dan's hairy back. Let's see it.
Oh, yeah, with my initials engraved.
Yeah. He ain't going to do it, so don't give us a super chat.
$100.
Now, also, I noticed on the MLS, I think we have less than 2,500 homes. And what's happening right now is a lot of people are moving out.
Wait, hold on. Did you say 2,500 homes?
Yeah, I think there's like 2,500 homes.
In the resale market right now?
Yeah, in the resale market.
Yeah, because the other day it was at 65, and then it was down to 55. And if we're at 25, man, we had a busy week.
Well, let's take a look right here. I could be lying, but you know what? It's all about the numbers game, okay? Give me a second. I don't want to show you guys my password as I log in right here.
Hold on. Let me take a quick peek.
Okay. All right, let's take a look on the MLS. So if we take a look on the MLS, okay, which is the multiple listing service, we're going to go everything that's currently active, single family residents. Right now, as you can see, single family residents, 2,114 homes. Wow, that's crazy, huh?
Insane.
The median price point for a home right now is $345,000. The average home price is $445,000. You get 3 bedrooms, 2.5 bathrooms, 2-car garage, roughly about 1,800 square feet. So let's role play this, okay? So we're gonna do 445,000 and below, minimum of 3 bedrooms and up. We're gonna look for 1,800 square feet and up, okay? So now, as you can see, we have 0 homes. That means I did something wrong. Let's exit back out here. 345.
Oh, that was additional living space.
Oh, is that what it was? Oh, where am I? Right here, right?
Yeah.
So we're going to go up. Now there's only 442 homes. Now let's take a look. What do we got here? We're going to just start from the highest price. We're not going to be buying a home that's at $65,000. Now let's just take a look. What can you get? Whoa! Oh, okay. We're not going to look at that. That's a lot of work.
That actually looked like
just
a
a little
diamond in
bit
the
of
rough.
Yeah. Now let's take a look right here on Topaz Hill. Let's see what we got. Oops, you know what? We can't show you that. All right, let's take a look at here. This is not bad. $445,000. Okay. Look at this.
Nice.
What do you guys think about this?
It's not bad.
Not bad.
So, look, not bad at what you can get.
I mean, it's not the Taj Mahal, but it's pretty good, man. You know?
Now, Dan, what I need you to
Nice,
do
clean
is break
property.
down $445,000. If you put down 20%, let's just say 20%, how much would your mortgage payment be?
Probably anywhere from, I would say, $2,300 to $2,500.
That's including taxes and insurance and
Yeah.
all that stuff. Is that correct?
That's correct.
Okay, so that's not that bad. Now, Joey, tell us exactly what is going on within the marketplace. What are you seeing today?
No inventory. Buyers. No, I mean, we're just seeing a lot of activity. You know, we're starting to see some more homes come on the market.
Yeah.
They're slowly coming on, but again, you know, as soon as they hit the market, they have multiple offers. Right?
Isn't that crazy? So think about this. If you look at homes that are 445,000 and below, things are moving so rapidly. Like, let me ask you this. If I'm a buyer that comes to you, right, what can I do to get a home quickly?
Move fast. So don't shuffle feet. If we're looking at properties, if you're coming out here on a Saturday and it's a Friday, you know, that's when we're really looking. You know, we're looking at like 8, 9 o'clock. We're going to look at the inventory, make sure those properties are available, get the top 5, and we're going to hit them down the list, right? Number
Okay.
1 on the list, and then we're getting pre-approvals in hand and offers in hand. Because if you walk through the property and you like it, we need to submit an offer right then and there.
Okay, so it sounds like in today's market, you got to move quickly.
Very.
Now, let's say if we go out and look at 10 properties and you like 5 properties, what do?
I'm submitting an offer, at least on 2 or 3 of them. Your top 3, we're submitting offers.
Okay. So that's probably the best way to move in today's market is to write up multiple offers, obviously. And when you go out there, you like it, write it up.
Yeah, in the property.
In the property.
In the property.
Damn, it gets no faster than that.
No, I bring my laptop everywhere I go. So if we like a property, we want to submit an offer, we sit at the kitchen table, the counter, flip open the laptop, write and submit. That's it. Can't wait. Can't wait.
Crazy.
Yeah.
No, that's
It's a crazy world right now with that, man. Like here in Vegas, anyways. I mean, I got people that always tell me. I always get that same question. So, would you wait, Dan? I'm not sure. Should I wait? And it's like, look, you can wait. You know, to counter what you just said. I mean, yeah, you got to move fast, but it doesn't mean you're always going to get an offer accepted. It just means you have a greater chance of getting an offer accepted. But you have to have some patience too, right?
Yeah.
You can't just say, well, we're going to make 1 or 2 offers, and because we were fast, we're going to get them.
yeah.
Doesn't always happen that way. You know, it's a very much a seller's market, and just like Chuck's negotiating skills and yours, sometimes you got to massage that situation to get an offer accepted.
Yeah. Now, going back to, let's take a look at the statistics. This is just only for the last 7 days. So if we take a look for the median price point for home, look at that. It's actually gone up $350,000 and $192 a square foot. Look at this. The average days on the market is only 10 days, guys. Things are moving fast. Average days on the market is 10 days.
Hotcakes.
Oh my gosh. Now,
Moving like hotcakes.
now, if we take a look, the average price point went down from $445 down to $432, but the average sales right now, look at this, $427,000. Look at the price point here, almost $200 a square foot. Average days on the market is 37 days, and this is actually across the valley. However, it really depends, right, on the location. Summerlin is going to be different versus Henderson, the southwest, and the northwest, okay? And this is where I always talk about this. Look, if you're coming on out here, you got to understand what's going on with the housing market. If you are speaking to an agent and the agent does not know what's going on with the market, you're pretty much dead out of the water. That's probably an agent that I probably don't want to work with, because if they don't understand customary practices and what's happening today, you're shooting yourself in the foot, okay? Now, I don't know everything. I could be talking shit, right?
Well, you got to. What is the old saying?
What?
You got to fake it till you make it.
Yeah. Hey, guys, you know what? I got a confession, guys. I'm not even a real estate agent. I'm done. I'm out of here.
Oh, wow. Wow.
But now I want to get into the next segment here. I want to get directly right into the financing. Dan, what is going
what's going on,
with
guys?
the financing?
Man, yeah. A lot of good information today, but it's not a lot of good positive things for people.
It's not positive, or
well,
it is?
I mean, it's okay, but it's not the best news out there, right? For people right now, with everybody's always rate sensitive, mortgage rate sensitive. So home sales in January up 4.3% overall.
Oh my gosh.
Yeah,
That's
right.
huge.
Projected was 0.9%.
Yeah.
So what does that say? Like that's almost 4 times the amount of what they thought it would be, right?
Yeah.
So mortgage application volume has decreased. We all know that, and it's decreased. Applications dropped 11.4% over this last few weeks. Really, it is large part due to what ended in April 3rd, back in 2020. If you compare it from last year to now, that's where the drop is at. So our drop.
Why do you think that drop is?
It's rates.
Just rates?
Everybody's sensitive about rates. Everybody knows that, look, you got a computer, you got a phone, you got things at your fingertips. They're rate sensitive. Refinance share of applications decreased 68% as a year-over-year basis, and refinances also decreased 11%. So overall, mortgage applications are down, and it's all because rates are going up. Right now, everybody asks me.
Yeah, but by how much?
Well, when you say a percentage, like 11% or whatever, they don't look at it as like, well, there's a certain number. They look at it as like, well, it's not a huge difference. It's not a huge number, but it's.
Oh, we got to cut you off from VegasCoins.Vegas. We got to hook it up. What does it say
Vegas.
right here, Joey? Go ahead and read that comment.
What would be the price be today to build another blue heron exactly like the meeting model party house video with outdoor basement?
I don't even know what.
Oh! It's coming out.
All right, let's go back to the first question. I don't even understand the question. Okay, what would the price today be to build another blue heron exactly like the meeting model party house video with the outdoor basement? I don't even know which one he's talking about. But typically, the blue heron right now, you're looking at about anywhere from $450. I'm going to say that's kind of like the average ballpark, $450 a square foot. I've seen it all the way up to $750 a square foot, depending exactly where you buy that lot at as well. So there's a lot of compensating factors.
Like, where did does that say 777?
Yeah.
Where did that, is that 777 because it's Vegas?
I don't know, but
I like that.
That's kind of cool.
I want to know who this guy is. VegasCoins.com. Is he into precious metals? Please let us know. Is that a website?
VegasCoin.Vegas.
Yeah, .Vegas, I'm sorry. That tells me that this guy probably deals with coins. But I think he's talking about the party house where we did a full video where they were doing a broker's open. I could be wrong. Hey, you know what? I want to answer your question, but I want to answer it correctly whenever you have some free time. VegasCoins.Vegas. Give me a call at 702-319-1092, or you can shoot me an email at chakits.k@gmail.com. That is chakits.k@gmail.com. Now, let's go ahead with this second question here. What does it say right there, Joey?
Joe?
What about the higher price homes, say 800,000 to 2.5 million? Are those moving quicker than previous years?
Ooh,
Great question.
Dude, that is a great question. Here's the thing. You always got to watch your marketplace as a real estate agent. Joey, what did I tell you the other day when I said, hey, look, I'm making a shift? Who am I marketing to now?
All the higher end homes.
That is correct. And the reason why is because now we have seen a big shift of high-end homes. Now, I'm going to pull up the stats here in just a second. Dan, let's finish off on your financing.
All right, let's go back. So we'll do it quick. A lot of good information, a lot of questions. So long-term U.S. rates, including home loan rates, increased sharply this past week. And we ask ourselves why, right? So we were just getting into that. Why is this happening? Retail sales, people going out and spending.
Yeah.
Obviously, it's connected to gross domestic product. While consumer spending, marketing, making up 70% of the gross domestic product. So people are out spending their money right now.
Yeah.
And you got the stimulus checks things going on. You got people getting their tax returns
Has
now.
that money came out already?
No, but I mean, they've had it, right? And so
Okay.
they probably have some money saved. They're talking about doing it again. So the willingness of somebody to go out and spend more money because there's potentially a stimulus check coming, that's big. People are getting their tax returns now. Crazy. I just had somebody say they filed their tax return. They got it within a couple of weeks.
Yeah.
You know?
Wow.
So with that, what that means is it's bad news for mortgage rates because the bond suffers. If the economy's doing well, typically mortgage rates are not doing well.
Yeah.
New home builders. We just talked about this. If you're looking for lumber, the lumber relief, the National Association of Home Builders continues to report an unprecedented strong demand for homes for lumber. Lumber inflation is up, and the cost of lumber is up 170%.
170%.
170%.
Now, we saw people waiting in line
Yeah.
for these houses, but a lot of these people, they're saying, are walking away now, right?
Why? They just don't want to wait.
Well, because they don't want to wait. Because the demand for lumber, now it could fix itself. There's a tariff that's coming out. Again, inflation, that's another big part. So with this news, rates aren't doing well with the inflation and the cost of these lumber and things like that going up, commodities. So we see inflation ticking up. And the last thing is really it's the supply outweighing the demand. The Federal Reserve has committed to purchase at least $120 billion worth of treasuries. Even though they're doing this, the economic data is still coming back that it's not making much of a difference. So if you look at it, the recent problem, the Fed has been on pace to purchase $30 billion in mortgage-backed securities, yet rates have still ticked up. This is because nearly $100 billion in mortgage-backed securities were available for sale, and the Fed only purchased 1/3 of those. So there's only so much supply that the Fed can buy into, which obviously artificially keeps rates low, suppresses rates. And so you're starting to see this happening right now. And then it's also making mortgage applications suffer too, because as rates go up, people regress. They're waiting to see what's going on with the market. A lot of things going on. So big thing is you got to look at the news for tomorrow and also on Friday, because right now we're looking at there's a few things that's coming out, but the old saying is in the bond market, cure for high rates is high rates, meaning at some point the uptick in yields makes investing or buying bonds more attractive, but we're not at that point yet. So we got the economic news report coming out tomorrow, gross domestic product. We also have the employment coming out. So there's a lot of data coming out in tomorrow and into Friday.
Yeah.
Potentially that could affect the direction of rates going back the other direction. I
hope they do, man. I'm trying to buy a house.
Well, yours is different. You're buying a new home. So we start looking at that, 90 days out. So there's time for correction. But if you're in the market now and you just got into a contract, you gotta maybe wait a little bit. But if you wait, maybe rates keep going up. So it's wait to see till tomorrow or Friday.
Now sometimes clients will call and they'll speak to you and they'll find out instead of buying it as a primary residence, they would have to go secondary, right? It's like a secondary home or vacation home.
Yeah.
Based upon their current situation and the strategy that we are doing. Now, what is the rates difference? You know what I'm saying, as far as rates?
Well, anytime there's more of a risk to the bank, the bank's going to pass the risk to the consumer, right?
Like how much more?
Usually it's an 1/8 to 1/4 of a point. But again, it comes down to credit score driven, right?
Yeah.
You got conventional loans, which are credit score driven, but it also plays a factor. What do you have in reserves?
Yeah.
If you're buying a second home, are you putting 20% down versus the minimum 10%? Are you putting 25% down? Are you taking less risk off the bank? Sometimes you can make up that change in rate or that slightly increase in rate for more money down or more reserves or better qualification. So on average, most people want to put the 10% down. They want the minimum amount to put into it, which I understand. I would do the same. I don't want to sink money into a house if I don't have to, but you might just take a higher rate, slightly higher.
Okay, so let's talk about buying down points, because we haven't talked about this for a little bit. Explain what buying down points and when should a consumer consider buying down points?
I think it's all case by case.
Yeah.
There's not a direct, like, this is a cookie cutter way of doing it and this is when you do it. I think here's what I would say.
Well, let's start off. What is buying down points? Let's explain that for the audience.
So buying down points is you got a par rate, which the bank is offering you a rate at no cost, right?
Okay.
And you can go up if you want to get credit back from the bank. It's a rebate from the bank.
Okay.
Or you can buy your rate down, which you pay money to get a lower rate. All of that's driven by your application. Okay. Everybody thinks like everybody's the same, and they go on to bankrate.com and it's like, hey, I'm getting this rate, and it's not that.
Yeah.
You got to get an application in. Everybody's different.
How much does it cost to buy the rate down, and what does it make a difference, like in the payment or? Well,
it's different for everybody.
Yeah.
If pricing in the market is better and there's a better appetite for investors to buy bonds, and you see pricing better for buying down the rate, then if you, it's all about.
So it comes down to pricing at the time.
It comes down to qualification of the borrower, but it also comes down to a contribution or blend of the market, what the market's doing and what investing is doing.
So let's just say if you wanted to buy down 1 point, so if you borrowed $200,000, you borrowed a $200,000 loan, you're doing 1 point, and 1 point is being charged at $3,000. So that means you would be paying a total of $6,000 to buy down.
Yeah, it's.
But then you have to figure out how much points are you buying down. So let's just say if you're buying down a half a point, which means it drops your interest rate down a half of a point, but you had to spend $6,000, and you wanted to find out exactly how much money you're saving, and also if it's worth it, you need to figure out what your original interest rate is going to be. So if you're only saving, let's just say $100 a month, that's $1,200 a year. You take that divided by $6,000. That tells you exactly how many months you have to stay in a home just to break even to see if it's even worth your time. Is that correct?
That's correct. So you got to do a full analysis of what you're trying to accomplish, and
correct.
I think if you're somebody that's older, maybe you consider it, right? Because it might be your forever home.
So just depending on how long you stay in the property, then basically.
Depending on the state of the property. Also, it's depending on what rates are doing. Like
sometimes you may not even have the money to do it up front.
Right. I mean, if we're in historic low rates, right? Let's say your credit score is a 685, for example, right?
Yeah.
You're not getting that top tier rate. Let's say your rate's a half a point or a quarter of a point. I would say a quarter of a point higher. Mm-hmm. You know that rates might not come back this low. You might want to consider to buy the rate down.
Yeah.
Right? Or if you're refinancing your home and you're using the equity in the property, we appreciated 8% last year. We're going to appreciate 5.4% this year. Just like you said, you got to look at that inflation and also the appreciation in your home. Maybe you reposition buying the rate down because your natural equity is going to build.
Yeah.
And so you use it that way, right? You're not putting any money out of your pocket. You're still paying for it, but you're paying for it with the equity built.
Now, it also doesn't always work out. Let me explain. When I bought my first primary residence, right, I should have listened to my wife, so my wife's probably listening to this right now. And I'm going to admit that I really fucked up on this one. I thought I knew what the hell I was doing, okay? So on our first loan, our interest rate was like at 5.8. And she was like, hey, we could just refinance later. And at that time, I was like 5.8. And this is when interest rates were like at, 8%, but we had great credit, whatever's, and this is when the market tanked. So we're probably like at 5.8 or something like that, or 5.5, I don't remember. And I was like, I want to buy down. And for me, it was mentally where I wanted to have a lower credit score. I wanted to be in the fours, like 4.9. So I was charged like a total of like $5,500. And my wife has said, hey, why don't we just wait? We could just refinance it. So what happened was I bought down the rate. 4 years later, drops down to 3.2. Then I refinance it into a conventional loan, right? Because I knew I was going to rent out the property and I got 3.2. And more of the story is I wasted that $5,000. Does that make sense?
It does.
So it's always case by case basis.
It's case by case.
And that was a mistake that I just literally gave away $6,000, dude.
But let's talk a little bit though. And we'll kind of wrap this up because I don't want to take up too much of the show. But when you look at rate.
It's all right. It's all about you. Here, boom. See? Right there. You're on.
It's the French bench.
The French bench.
French bench, baby. That's right.
All right.
Workshop.
That's right. Get that workshop, baby.
Hey, so check this out.
Yeah.
You look at rates and you look at your loan amount. Mm-hmm. Like if you had a $200,000 loan amount and your difference is 1/8 of a point, you might be saving $15 a month.
Yeah. Oh,
Nothing.
my God.
Isn't that crazy? I'm just saying, like, now look, if you're buying a $500,000 home, sure, you want to be rate sensitive, but that might only be a difference of $60 to $100, right?
But it also, depending on how much money that you're making, too. I mean, if you're making $10,000 a month, an extra $100, it's not a big deal.
It's all
case by case.
What I'm saying, though, is people, it is saving money. People are watching their money. Some people are on furlough or they were unemployed. They're starting to see the value of that dollar, right? But is it life-changing to get a rate, 1/8 or a quarter of a point difference? Yeah. Not really. Mm-hmm. It's important because over time it would be. But let's say you're getting into the house and you don't know if you're going to stay in this house longer than 3 years.
Yeah.
Is it really going to make or break your situation? Now, you obviously want to get the best rate.
No, but I'm going to say this. If you're looking to sell in 3 years, you're pretty much gambling. I would just rent.
Well, or you just say, hey, you know what? It's you're not going to be buying the rate down.
Yeah.
You're not going to be.
How many points can you buy down? Is there a limit?
Well, you got a 3%.
Can you buy like 50 points?
Yeah, the other 47 points go into my pocket. No, just playing.
No, you ain't.
No, but literally you could buy down to, I would say like on average, you can buy down. There's a certain percentage. You can't go over 3% with all of your total costs and fees and also buying a rate down. So there is a limit.
Yeah, okay.
Obviously, it depends on how much your loan amount is, because if you have a higher loan amount, you may be able to buy the rate down further. You know, if you got a lower loan amount, it might be taken up a lot quicker, right? That 3%.
I want to ask you this, with the loans out there, can you actually do interest payments only?
Yeah.
So they're still out there.
They're out there.
Have you done any of those?
No. Most people, most people, since what happened with the whole housing situation, they stay away from it.
Really?
Now, in some cases, you can make a case though, if you got a jumbo loan, right, and you want to look at just interest only, or you want to look at maybe a 5 or a 10-year one arm.
Ooh, I wouldn't touch that.
Well, let me explain. What if you're not going to be in the house longer than 5 years?
Yeah, but then you're kind of gambling on the market. You know what I'm saying? It's almost like you're rolling the dice.
You're rolling the dice,
for me
but
personally,
look,
it wouldn't make any sense.
Here's my thing.
I would stick to a fix.
Some people want to get a nicer house, especially in an accelerated market like this, and they may not be able to afford it.
Yeah.
Maybe they're going to reposition in 4 or 5 years. They know they're going to get a bonus, or they're going to increase in income. Maybe their wife or their spouse is going to start to work. Maybe they can afford that better. So maybe having that 5-1 arm puts them in a position where I got 5 years to adjust, and then it's going to be, you know, every year after that, it's going to be a little bit higher potentially.
Can you refinance it during that time?
Yeah.
So,
that's what I'm saying.
That makes sense.
It's payment shock.
Yeah.
Right. And some people, it's the payment's so higher, they want to go to a house and it's like, I can't afford this, but I know, you know, somebody's going to be working. I'm going to have that bonus. I might get an extra $5 an hour by that point. You know, I can reposition. So I don't know. You really got to evaluate that.
Now, from a 15 to a 30-year loan, okay, how do I know, or is it best for me to do a 15 versus a 30? Because on a 15, right, payments are higher, right, but also the interest rate is lower, but you're paying down the home a lot faster. Would you rather do the 15 or the 30? And how do you determine, right, or how do you advise the client that this is probably the best situation for you?
Obviously, you got to find their goals.
Yeah.
I mean, for me, if somebody's doesn't, like, if they're older and they're set in their ways, they just want to not have a payment, or let's say they're on a fixed income.
Yeah.
I mean, is the 15-year the most, you know, is it the best way to do it? I don't know. It would be dependent on how much they make.
Okay.
So on a 15-year, if somebody's like, hey, you know what, we make a ton of money, we don't want a payment in the next 5 or 10 years, and we just want to get it out of the way, maybe for somebody like that, or they're coming from maybe a 30 and going down to a 15 because they want to shave off, 10 or 12 years of interest. Maybe they're on year 4 of their loan, and they want to shave off those extra years from year 15 to year, 26, right?
Yeah.
So you're shaving off about 11 years of interest.
I do like the 30-year, just due to the fact that the payments are going to be lower, but if you want to make more towards the principal, then you can.
Yeah, you have that option.
Yeah, exactly.
That's what I was going to say. It's like, why not control it yourself? You're running a business technically, right?
Yeah.
I mean, you're buying a house.
Maybe people are just not that disciplined. I don't know.
Well, I think that it's not. It's like this. If you're doing that and you're going into a 15-year and you have a higher payment, that's even more discipline, in my opinion. Now you're taking on a higher payment. You really got to be disciplined. You really need to make that money, that extra money. So I don't know. I think I would go your route, Chuck. I think I would stay in the 30-year if it's my personal opinion, and maybe pay an extra payment when I have it. Doesn't have to be every month, when I have it.
Mm-hmm. Now I want to get into this Biden situation. I know that there's some sort of tax incentives, right, or something like that. If you buy a home.
Yeah.
You know anything about that?
I don't know if is it passed though?
I'm not too sure. You guys know anything about that?
I
haven't had a chance to read the article.
But I don't know if it's passed. I think because look, every president.
Because I know that Bush administration, and when it transferred over to the Obama, when I bought my first primary residence, you got a tax incentive of $8,000, and I literally thought you got the $8,000, but what I realized is at the end of the year, you're contributing $500 every single year until it's paid off.
Yeah, there's nothing for free.
I was like, damn, I thought it was free.
Just like these down payment assistance programs, there's nothing for free. But look, at the end of the day, every administration, the housing sector is a big part of our economy.
Yeah,
and they're always going to invent ways and try to get different things that will push somebody to drive the market, because if people are out spending, they're buying homes, right? That's big purchases. Yeah. And so if you're getting these down payment assistance, these programs and stuff, it's going to push people.
What programs are out there?
I mean, there's different programs. You know, for me, I always say this. You're always going to be paying you're going to be paying for something, or you're going to be restricted to something with these down payment assistance programs, because sometimes they're zip code restricted. A lot of times they're income restricted. And so I don't know. And if you go to the one, which I think is the most lenient, which is the Home is Possible, they got the Home at Last. Those are also income restricted, but they carry higher rate. Sometimes you're paying more for the loan. So if you have to do it, right?
Sure.
Go for it. But if you don't and you have a way out, I wouldn't do them. That's just my personal opinion.
All right, guys, we are running into an hour into the show. We're going to finish this thing off. Any final thoughts, Dan?
No. French workbench.
French workbench. He's so cheesy, bro. This guy got the shirt and the hat. He got the merch.
Right there, baby.
Joey, let's finish it off, man. If somebody is a licensed real estate agent, want to get into the business with you, they want to partner up and join the team, what do they do? How can they reach you?
They can hit me up at 702-608-2220.
Guys, I'm going to have a link in the description below. I just want to say thank you very much for tuning in. Again, if you guys want to join the team, we do have a lot of leads. Business is going good. It's all because of you guys. Again, don't forget to visit lvhomeexperts.com. If you guys are interested in purchasing a home, this is where you're going to start. Brand new homes, resale homes as well. Also, there's going to be a link to the approval page for Dan French with Guaranteed Rate Mortgage. Thank you so much for tuning in, guys. I'm Chakits, Krulsawat with Simply Vegas, and have a blessed day.
777.
Oh! Thank you very much, man. You are the man.